To all our viewers from the United States, Korea, and around the world, welcome to Global Money Talk by SamProTV, live from the floor of the New York Stock Exchange. I'm your host, Remy Blair, and you're watching our live broadcast from the financial capital of the nation in New York City. And we'll begin the hour with the market briefing, as well as live coverage of the U.S. markets. And for the market briefing today, we have Tai Wong, independent proprietary trader. Additionally, today we'll have Richard Bayless, co-founder and portfolio manager of Commodities Asset Management, for a discussion on the obesity drug market. But first and foremost, Tai, good morning. Great to have you here today.
Good morning. It's always good to be here.
Well, first and foremost, let's start out by looking at the major U.S. stock averages.
Yes.
We started out in positive territory, but now we're seeing the Dow Jones Industrial Average down by about 0.5% on the session. And interestingly enough, we are seeing financials as the laggards this morning. And when we look at the other equity averages, the NASDAQ Composite Index is slightly higher on the session, up by about 0.2%. Meanwhile, the S&P 500 is nearly unchanged on the session after a flat open. So, Tai, I want to start out by looking at the Dow Industrials. What do you make of what we're seeing in terms of today's weakness following yesterday's rally?
It's still early in the session. The S&P 500 actually had, a very nice rally, not taking back all of its losses from Friday, but it was a good session, and it'll be interesting to see where we end up today. The thing that's raising people's eyebrows this morning is how the financials are reacting. I mean, we're looking at JP Morgan. It's been down 6%. That's a pretty hard smack. Goldman Sachs, which, by the way, rang the bell here a little while ago, is down 4%.
Yes.
Some wag might say it's because they rang the bell. But it seems to be a larger problem with the financials, and there's whispers that saying it might be due to Ali Financial, which is down 15 or 16% when I last checked, and it was because they reported that some of their consumers were coming under duress, and I guess that sort of made the financials, make traders climb a wall of worry, saying that if loss provisions may have to grow. If this goes through some of the other larger banks. I mean, Ali is a regional, so it's interesting to see how. I'm interested to see how the financials do the rest of the day. I mean, actually, there was good news overnight for the financials, because the Fed came out with the proposal saying they're only raising capital requirements 9%, and that's down nearly half from what the original plan was going to be after substantial lobbying by the banks. And I'm sure Senator Elizabeth Warren will be very, very unhappy about that, and will give Chair Powell a hard time at the next Humphrey Hawkins or semi-annual testimony. But it's good for the banks. I mean, I worked for banks for a long time. I think they're a lot safer than they were before, specifically with funding. Now, Lehman went under functionally because they couldn't roll their funding. They had funding coming up on a Monday and they couldn't roll it, but now they make banks have funding a month ahead, 3 months ahead, even a year ahead. So the system, I do believe, is a lot safer, but this is definitely good news for banks, which is why it's so unusual that they're down so much and they're sort of dragging the S&P down to flat. Otherwise, I think the S&P would be a little bit higher.
And Tai, as you mentioned, JP Morgan is down 6% in New York morning trade, followed by Goldman Sachs and American Express, both down by around 3% this morning, and they are weighing on the Dow Jones Industrial Average this morning. And of course, as we look ahead to not just today, but tomorrow, we're going to be paying attention to inflation figures that are coming out. So within less than 12 hours, we do have the U.S. presidential debate taking place, but less than 24 hours, we get the first of 2 inflation data points this week here in the U.S. Tomorrow morning, we get CPI figures followed by PPI. So, of course, we know that the Federal Reserve will be watching these numbers closely. And given the recent market volatility, we'll have to keep an eye on what happens tomorrow morning.
Absolutely. It's the Federal Reserve meeting starts tomorrow, and it's a 2-day. They're all 2-day meetings now. Starts tomorrow and ends on Wednesday. And they will certainly be looking at that number. I think the market is pretty 70-75% set based on sort of the CME's FedWatch tool that it's going to be 25 basis points. Unless CPI comes in, I think, very soft, I don't think that's going to change. I think 25 is pretty much set now. But if you get a very weak CPI reading, there's a possibility we could see 50. Certainly, the markets might react that way. But it seems a little unlikely. But certainly, the market and the Fed will be watching it very, very closely. And then on Wednesday, the PPI gives us an idea, what's in the pipeline. And sort of pipeline is sort of important as well. But PPI has been generally relatively soft compared to CPI.
And as you mentioned, the Fed Reserve will be watching these numbers closely, especially on the heels of that mixed U.S. jobs report that came out Friday.
That's right.
And of course, given that the Fed Reserve meeting will be taking place on the 17th to the 18th with that rate announcement coming on the 18th, we will have to keep in mind that there's a blackout period for media in terms of Fed officials speaking, so we won't be hearing any Fed speak for the coming week.
That's right. I think the blackout period started last Friday, and the last comments were, I think, Governor Waller was open to rate cuts,
Yes.
which is important because he's been seen as sort of a weather vane for the Federal Reserve. But I do think it's 25 because I think 50 for them would communicate something they don't want to communicate, that essentially they were a little late. I don't think they want to give the market that sense. And they also don't want to panic the markets.
And speaking of the markets, Tai, I do want to take a look at what's moving the Dow, but in particular, we're seeing Apple shares today down by about 0.7%, and that does come after their event yesterday, which took place in California, so
Yes.
the Glow Time event. And, Tai, you and I were talking about smartphones ahead of today's show. I have an iPhone, and you do not. So what did you make of some of the announcements that came out from the event?
So I think Apple is the most active shares today. Like 18 million shares have already traded, and I think overall the market was underwhelmed. But I think the market didn't expect to get their socks knocked off. So which is why you had a relatively. So I think they might have been down a little bit yesterday. Apple. The iPhone 16 is nice. Has a really good battery, has a special camera button, and I suppose my kids' generation would say, oh, this is really important if there's a special camera button. I can take pictures faster. But it was really nothing really new. As a matter of fact, the most interesting things might be the AirPods, which have a hearing aid potentially built into them pending regulatory approval. So that's interesting, and you can say, I don't know what the overlap between people who wear AirPods Pros are and who need hearing aids, but it's certainly a step towards more health-related health-related features that they're putting into their products. And I think there's a sleep apnea feature on the Apple Watch. So but it's all incremental steps. And the pricing was considered sort of decent. So, but the market not that impressed. What I did find really interesting was that Huawei, whose products are not sold in the United States, just an hour or so after the debut of the Apple products, showed their new tri-fold phone, and that's 3 folds. It's priced at $2,800. Now I have a folding phone. That's a Android Samsung, and I love it because I read on it all the time, and it's great. And I would love to have a tri-fold phone. I know like Google has a folding phone. I suppose Apple someday might come out with it. I don't think I want to do it with the first generation, but the folding phone is actually great.
Well, you brought up a lot of important points there, Tai, because when it comes to phones, at least for myself, I have not ever used a bifold or trifold phone, so that concept is a little foreign to me, but the last time I upgraded was many years ago, and we're thinking about consumers out there, both in the US as well as overseas, and most consumers are holding on to their iPhones longer now, and I think that speaks to the purchasing power of consumers out there. And when we look at that trifold phone from Huawei, I understand that the price point is $2,800 US dollars.
That's a
That is
lot.
expensive.
I think it's going. Maybe it might be a status item in China. I mean, the Chinese economy is struggling.
Yes.
But I think this was a lot of it was a one-up where this is the first tried fold phone. It's even Samsung, who's done really well with that, hasn't done it. So I think it's important to show that for China to show that we're at the cutting edge of innovation.
And when it comes to smartphones, I do have to say that when I first switched to the Apple iPhone, I was on a BlackBerry, and I was one of the last holdouts because I just got so used to that actual keyboard on the phone that I couldn't move away from it for the longest time.
Right.
So it'll be interesting to see when it comes to adoption for that Huawei phone. And before we move away from Apple's event, I do want to address what you mentioned about the AirPods and the Apple Watch. So personally, I recently did make purchases of those AirPods in addition to a watch, and I think I should have waited a little bit longer since prices do tend to come down after these launch events. But it's interesting because when we take a look at purchasing power, right, for items that are being introduced, the sound that you mentioned for those AirPods, it does seem as though they're trying to capture an older demographic. What do you think about that?
Well, to your point, the older demographic, is the richest demographic, and they can afford to buy more things, and if it's something that's going to improve their quality of life,
Sure.
if you own a decent pair of headphones or a headset, and you're saying, wow, this can actually give me hearing aid capability. This is it's kind of something that you might not consider otherwise, which is I think a pretty smart move. And I don't use AirPods, my kids do, and the sound is great, the microphone is great, and as a matter of fact, I have to say that when we had a call with one of my kids who were away at college, I said to the other kid, give me one headphone and you use the other, and we could both hear very, very well. So I mean, it is great product, is really, really well designed, but the market is. They move incrementally. I love to see what the next big innovation is going to be. And you do have to remember that Apple is an unbelievable company. Their total revenue last year was something like $400 billion. That's Denmark or the Philippines, which is quite remarkable. And their profit on that's $100 billion. So.
Yeah, that is considerable, and we're not talking millions, we're talking about billions. And I think one last aspect that I do want to cover from that Glow Time event is Apple Intelligence, right? This is their artificial intelligence technology. And because you mentioned some of the revenue, Tai, we have to look at the European market, which accounts for about a quarter of Apple's revenue. And when we're talking about entry of Apple Intelligence into countries like China or areas or regions like the EU, we have to think about regulation and regulatory hurdles out there. So how do you think Apple is going to address some of these given the competitors out there?
Their artificial intelligence function is forthcoming. They say it'll be ready sometime in October with probably another iOS release or something of that nature after the first phone ship. But they've had to be a lot more careful in Europe because Europe is much more regulation heavy. As a matter of fact, it just came out that the European Court of Justice made Apple pay $14 billion in sort of back taxes to Ireland because the Irish charged them too little. And this is a case that's been going on for the better part for probably a decade. So I think they're very, very careful about it. They'll have to tailor their offering depending on where they are. And I think this is true of a fair number of companies, but particularly the tech companies.
And as you mentioned, Google and Apple were both hit in billion-dollar European crackdowns when it comes to taxes as well as antitrust. And in addition to that, since you mentioned China, I do want to talk about China's economy now, especially given what we're seeing in deflation. So where are your concerns?
So China's travails, and if we could get graphic number 1 up on the screen. This is from Bloomberg. It's the China's economy-wide crisis. This is what they call the GDP deflator. So they're measuring all the prices in goods and services from one quarter to another. And if you look at the right-hand side of that chart, you'll see that the GDP deflator has gone down for 5 straight quarters. And that's the worst since the financial crisis. There was barely a blip after after the Asian currency crisis in the late 90s. There was only 2 quarters of lower prices during the financial crisis because they did a lot of stimulus very, very fast. That's been credited with helping the world economy. But this time, they're struggling. And the scary thing about deflation is the consumer might think that lower prices is good, but lower prices overall in an economy is actually quite risky because it makes businesses think, oh my goodness, prices are going down, so my profit is going to be less in the future, so what I'm going to do is I'm going to cut back on spending. I'm going to start laying off workers. So it becomes sort of a vicious cycle, and they're struggling to fix that. And one part of the reason is with the current government in Peking, they have put on a lot of new regulation over the years that have sort of what I like to say has really crushed the animal spirits of the Chinese economy. Animal spirits is a term that economist John Maynard Keynes came up with, and basically it means sort of the spirit and the strength and the innovation of the economy. But when there's been a lot more regulation, a lot more government interference in private companies, it tamps down those animal spirits, and once they're gone, they can be hard to wake up again. So they're really struggling in terms of their economy. And you can see one of the impacts is you can see that oil is making new lows every day. New lows every day because of demand from China is expected to drop. You can see that in base metals, where copper, aluminum, and metals like that, where China uses literally 50% of the world's output. So because China doesn't have its house in order, it's actually impacting a lot of commodities.
Yeah, speaking of commodities, there in today's trading session, we are seeing front-month crude oil futures, WTI, that is below the $70 a barrel mark, and it is off by nearly 4% on the session. And very quickly, before we move away from China on the heels of your latest report, there are headlines that the PBOC's China bonds are seeing a trading surge and China's yields are smashing through record lows. So we've been keeping an eye on treasuries here in the U.S. as well as overseas. So what do you make of that?
So that's something they don't want to see. So I think the benchmark bonds and maybe it's the 10-year bond in China, the yield's only just over 2%. So if people are buying bonds, driving yields even lower, it says that there's very little confidence in the economy, confidence that the authorities will do what it needs to sort of get the economy going again. So that's a signal that they don't want to see. They haven't been willing to put out the stimulus that they did after the Great Recession, but at some stage, I think it is likely they will have to do something. And when they do it, they will do it. They have tremendous political will. They may do it very, very effectively, but we just don't know when. And the market could be forcing them closer to that.
And while we're on the topic of yields, very briefly, I do want to ask you about this because when it comes to yields and the recession indicators in terms of the yield curve, the inversion that we saw, I do want to briefly touch on that, especially on the heels of that discussion that we had last week in terms of the SOM indicator, Claudia SOM's recession indicator. So what did you make of that action that we saw in terms of the yield curve?
So the yield curve, has recently disinverted, and there's a lot of discussion on what does that mean. Now we have a sort of a normal yield curve now, where you have to pay, yields are higher further along, which you should normally be because of the risk involved. But if you look at sort of recessions, the last six disinversions, when the yield curve has done that, it's all over the map. The last 3 times, it signaled a recession, but in the 1980s, after the yield curve disinverted, you saw significant rallies in the S&P 500. If you look at that as a signal, of how well the economy is doing. So as a matter of fact, the dispersion is wide. We don't know.
And very quickly, Tai, since we're heading close to the 11:30 hour, I do want to touch on something that we're watching very closely, and that is the U.S. presidential debate taking place this evening, 9 p.m. Eastern Time. So we'll get to hear from both candidates, Trump and Harris. So what are you expecting, and what do you think really matters when it comes to Wall Street?
Well, first of all, I'm getting my popcorn and soda, and I'm going to be right on the sofa for however long it goes, an hour and a half or whatever it happens to be. I think most people think that it will probably, given both of the candidates, will be style over substance, and this is, and the election is very, very close. I think we've seen the big bounce that that Vice President Harris got retreat a bit, and now it looks like that Trump, again, may be a little bit ahead, very, very close. This is going to matter. Now, how tradable is this? That's a good question. A lot of people, people have looked at the Trump trade, which faded after Vice President Harris was replaced President Biden on the ticket. So I think, well, first of all, it's late in the evening, so there, for most retail investors, at least in the United States, it's a little hard to trade. But I think the one place for me is the difference between the two candidates is regulation. I think you're almost certain to get a lot less regulation with under a Trump administration than under a Harris administration. And I think taxes also matter. I think taxes will stay where they are. I'm not sure there's appetite in Congress to cut taxes any further unless there's a big GOP sweep. And similarly, I think taxes could edge higher, especially if the Trump tax cuts expire under a Harris administration. So how would you trade that? I suppose you could look and trade S&P futures, that if Trump looks like he's doing very well, or has done very well, that futures may rally on that. But for some of our other viewers, if you can bring up graphic 2, if you look at graphic 2 is a picture of Bitcoin in the red line, and the S&P 500, which is in the blue line. You can see the Bitcoin has been tracking the S&P very, very closely. As a practical matter, it's not a safe haven. It's just really now a risk asset. So you could, if you were so inclined, have your finger on your Bitcoin trading button, depending on who's doing better. But personally, I think I'm going to just sit, watch, enjoy my popcorn, and really try to get a sense of where the direction of the debate is going. I think it will be actually very, a very interesting debate, and I suspect, depending on how it goes, it may be the final one. If neither side gets an advantage, neither side may want to risk it again. So it may be the only debate. It wouldn't surprise me at all. So this is it'll be exciting. Different ways to trade it. I mean, other people have suggested that, and Goldman Sachs has come out with a Trump basket and a Harris basket. Most people think that under a Harris administration, things like electric vehicles, like solar, will do quite a bit better. But under Trump, defense might be better, as well as defense might be better, and crypto, because he recently become a big fan of crypto. So but I do think it will be a little difficult to trade, but if you were so inclined, I think you could do that.
Well, you hit on a lot of important points there, Tai, ahead of tonight's debate. And I think even the conditions for this actual debate, there's no audience, and both of the candidates are under strict mic rules, right? When one candidate is speaking, then they'll mute the other candidate's mic. So it'll be interesting to see how this unfolds. And you brought up Bitcoin. So in terms of campaign financing, it's been very interesting to watch how some of these companies have been funding these candidates, and we'll have to wait and see whether or not we get any statements from either candidate regarding crypto. But we did get Harris put her economic policy out there, so it'll be very interesting to see how this affects the markets and how this debate unfolds.
Yes, absolutely. The mic rules are sort of interesting because, and I think it may actually benefit the president, because he sometimes can be his own worst enemy. I mean, he delivers zingers probably better than anyone else, but sometimes it's just a little too much. And I think if he's smart, he talks about policy, he talks about what's happened in the past few years, especially with the border, which I think is his strongest suit, and stays away from the name calling and the identity stuff that won't play well.
And so many issues that we'll have to pay attention to when it comes to the debate. So, Tai, I'm sure you and I will be talking about it on Wednesday,
Absolutely.
Especially after inflation figures tomorrow morning.
Yes, we'll talk about inflation, then we'll discuss the debate. Can't wait.
Absolutely. Thank you so much for joining me, Tai.
Yes.
And coming up, I will be joined by Richard Bayless, the co-founder as well as portfolio manager of Karani Asset Management. Don't go away. We'll be right back.